Hello everyone, this is Mank and welcome back to the channel. So today we'll discuss about one more stock called Repco Home Finance, and this particular stock is the housing finance sector. So we'll discuss this stock in three different steps. First, the sector, and second, the business, and third, the fundamentals of the business. So before we start this video, if you have not subscribed to the channel, please go ahead and subscribe and also hit that bell icon so that you get notified whenever we publish the video. And second thing, anything on this channel is not a recommendation to buy or sell. It's just my personal opinion. So before you make an investment, you please do your own research and due diligence and then only make the investment. So now to start this, why housing finance sector and why this company? So first thing first, right now every other housing finance companies or even the banks are providing housing loans at very nominal rate. So it's historically the lowest rate right now what's going in the market. So there's company banks which are offering housing loans from 6.5% as low as 6.5%, and there are some NBFCs, housing finance companies like Repco Finance, India Bull Housing, and companies like PNB Housing. They are offering loans to the rate of 7%, 7.5% as of now. So that's the lowest in the history, because of which the sales in the case of banks for the housing loan products are at a all-time high. There's a lot of people are also trying to buy house so that they get less EMI for their houses. So somehow this EMI are coming at a figure which is almost close to whatever the rent they're going to pay, keeping this current rate of interest in perspective. Also, along with that, state governments are also giving some kind of relief for people, for people who want to buy houses, saying the stamp duty has been reduced in Maharashtra and Karnataka. Stamp duty has been reduced from 5% to 3%. And in Karnataka, the government has passed the budget where they've given some kind of rebate on houses which are less than 50 lakhs or 45 lakhs. So things like that are also happening, which is encouraging for this particular sector. Also, one more thing to note, so it's not always that you buy the house at this point, whatever the rate of interest, so it's not always fixed. There are some products which is flexible. So whenever tomorrow the rate of interest increases, when RBI increase the repo rate, so that time the rate of interest will also increase. But what happens? You don't leave the bank since you are a customer and you are a customer for long term. So what I mean to say, suppose you buy the house today at 6.5% and you buy the house for 20 years EMI, and after 5 years for some reason the repo rate goes high and the interest rate becomes 10%. That time also you can't leave the bank and you pay all the money. So you will have to bear the interest rate of 10%, and your EMI will be adjusted as per the new rate of interest. So at that point in time, those financing companies will make more money out of your houses or out of their financing your houses, and their profitability will increase. So this is the reason why these housing finance companies are slowly coming into focus, keeping that futures perspective and future earning possibilities. So this is one thing. So there are basically two parts. Now the sales are going high since rate of interest is less. Second, since because sales are going high, tomorrow 5 years down the line, whenever rate of interest increases, that time since they have made the sales and they have got the customers, their margin will increase to a big number since the rate of interest have increases and they have a huge customer base which they have built in the time of pandemic, and the rate of interest or whatever government options are available to them. So, as a sector, this sector is going to do good in the future because of whatever happened as of now. Now we'll come to the company called Repco Finance. So this company is established in April 2000, and they have by March 2018 they have around 131 branches and they have 29 satellite centers in different parts of the country, especially in the uh, South India, Tamil Nadu, Andhra, Jharkhand, Kerala, Karnataka. They're everywhere in the South India. Apart from that, they're also in states like Madhya Pradesh, Gujarat, Odisha, West Bengal. So they are into different only housing finance, and they have different kind of products which supports housing finance for different category of people. When I say category of people, means different kind of buyers. So we'll see a little bit of the products. So they have multiple products called Repco Rural, Dream Home Loan, Home Makeover Loan, Plot Loans, NRI Housing Loan, Prosperity Loan, New Horizon Loans, CRE loans, 50 plus loans, super loans. So they have products for all different verticals. If you want to buy a plot, they can give you loan. If you want to buy a dream home, like it's a luxury home, if they give a loan. If you want to buy a rural home, they'll give you a loan. If you want to buy a commercial property, they give you a loan. if you are 50 plus and you are going to normally at 50 plus and all, some company doesn't give loan, but Repco gives a loan where they'll adjust the repayment as per your current age. So we'll open this product and see what the differentiation right now for this particular product. So if you see, they give loans, home loans exclusively to salaried class borrowers who are aged above 50 years, in which their loan repayments and disbursements are structured around their retirement pension income. So they consider your pension income as well as they consider sorry, at what time you're going to retire, at what age you're going to retire. Based on that, they will settle this like pension income, and based on what time you retire, they will create the EMI based on your attaining the age of 70. So suppose you are age of 55, you want loan and you have a pension, so they will give a loan only for 15 years, like 70 till you age 70, and the amount of loan disbursed and the EMI will be based on whatever pension you are going to get. So this is one of the unique product they have. Along with that, they have something called CRE loans. Okay, so CRE loans is also, it's something like your commercial loans. So you can have house buildings, some commercial spaces, and also some residential building. So these are for properties what we see, like the shops at the ground floor and there are residential in the first and second floor or beyond. So for this kind of properties, they give something called commercial real estate loans. So like this, they have multiple products. They have something called super loan as well. So super loan, I found it little unique because this is not based on you buying a loan. This is for people who are like, I want to construct a house on the land owned by my parent, so I don't own the land, neither it's from a builder, it's a flat. So I give my father's document that he owns the land, and then I, based on that, I get some loan amount for constructing a new house on that particular loan. So this is also a differentiator product for this particular company. And also they have the same thing, loan tenure is maximum 15 years, and some 85% 80% loan amount based on either residential house or it's a construction of residential house. So these kind of things. So they have a lot of products, they have a good network like in different states, and they have been there in the business for around 21 years right now. So they are kind of established company. So this is what this product is all about. The company is based out of Tamil Nadu. Now we'll understand the fundamentals of the business. So we have seen the sector, how it is going to do good in the future. We have seen this particular company, what is there all about. Now we'll see the fundamentals of this company. So this company is a mid-cap company and its market cap is only 2,173 crores. The current price is 347 and the book value is 314. So it's very close to its book value, and that's a good part. ROE is very good compared to your sector. It's 10.4. ROE is also good as per the sector. So normally we don't see ROE of 30 and 40 in the case of housing finance companies. So it's for any finance. If you've seen banks also, you never see ROE of 15 and 20. They'll be always in the range of 6 or 7. And banks or financing companies which have a ROE of 10 and 15 or ROC of 10 and 15, those are considered good. Their promoter holding of 37.1%. There is nothing pledge, and their debt to equity ratio is very high, 5.26. Now, if you've seen previous products, I normally say if your debt to equity ratio is more than 1, it's bad. But in the case of finance companies, if your debt to equity ratio is 5.26, it's not considered bad, because your debt in the case of finance companies is your asset. So how to understand that? The more money you have, the more money you can loan. So the more you are in debt, the more is your strength to loan the money to your customers. So if you're a housing finance company, you have to finance, you have to give money to your customers. So for that, you should have a war chest, you should have a capital chest. So when you want to create a capital chest, you go in debt. So the more money you can borrow, the more money you can lend. So that's why reason debt to equity ratio high being in the case of financial companies are not bad. For example, if for just for clearing the point, the biggest housing finance company is, in terms of market cap, is HDFC. So if you see the debt equity ratio in the case of HDFC, so the debt equity ratio is also 2.97. So if you see, they are in debt of 4,26,000 crores. So that's almost close to their market cap. So market cap is 4,63,000 crores, and their debt itself is 4,26,000 crores. So even a company like this is huge debt. So that means the debt is good. So that the bigger the debt, the more is your asset quality. So this is one thing. Now we'll go to the quarterly results. So Now see, if you see, this company is growing slowly and over the time. They have not seen much decline. So 2018 to 87, then September it was 291, then 304, 308, 328, 332. So every quarter they are increasing by small margin. Then December 2019 they were 340, March 20 they were 346, June pandemic everyone affected, so it's 338. They didn't affect much, slightly they reduced. Again September they again got back some money, 348, and December quarter they posted the highest revenue in the last 12 quarters. So it's 12 quarters, it's 355 crores is the revenue. So highest ever in these all many quarters listed here. And if you see for net profit, this also almost second highest, almost highest in the case of your quarterly results. So the highest was 105, that was the year 300 September 2019. Okay. So now apart from that, 82 crore is a good revenue when it comes to pandemic. Now we'll go to profit and loss. So we'll see in 2015 it was 693 crores. By the time there is 2020 it was 1348 crores. This was the highest. So they are growing every year in terms of revenue. In terms of interest also they are getting more interest, like it was 431 crores and now in 2020 it was 825 crores. In the case of trailing 12 months also they have made a revenue of 1386 crores. So every year no matter what, even in the pandemic also, overall the revenue is more than the previous year, and also their interest also more than the previous year. So that means their chances of NPA is also very much less compared to other companies. So even if in the pandemic their customers have been paying their money or their EMI back to them, that's why their interest is not affected in this last 12 months as well. In the case of net profit, also they have posted almost close to your last year profit as well. So what I mean, if even there was a pandemic, then also this particular company didn't see any much effect on their business. The revenue also is more than the previous year, your interest also more than the previous year, and your net profit is also relatively same as compared to previous year. So there is not much effect on this particular company in terms of pandemic. We'll see balance sheet. So balance sheet, their reserves were 755 crore in the year 2015. By the year 2020, their reserves became 1767, and September 2020 the reserves are 1905 crores. So it's three times. So they have grown three times the reserves in the case of 5 years, and that's a good growth for a company of this size. And then if you see borrowings also they doubled over the years. So they're not growing very fast, but they are growing, and that's a calculated step they are taking in growing. So they're not creating much of NPS, they're not losing money, they are slowly growing, and that's a good growth, and that's what we should focus. And that's why this particular stock is what I'm looking at right now, and it's kind of looks like a very good stock in terms of the management, what they are doing and how they are planning their growth as well. If you see the promoter holdings are 37%, and then FIR, DIs are heavily invested. FIIs are owning 19.84%, DIs are owning 20.07%. So this gives a lot of confidence to retail investors when you see FIIs and DIs are heavily invested in a company with such a small market cap. So SDFC market cap is in lakhs of crores, around 4 lakh crores, and this company is only 2173 crores. So that's a very small company compared to the market leader. Still we can see the FIRs and DIs are invested very heavily on this company. So this is a very clear indication of how strong the management is and what the direction they are taking, and they are in the right direction. That's why institutional investors are putting money in this particular stock. So this is what the company's fundamental looks like, and this is a short a good company to look for and to be tracked. So so this is like my personal suggestion is to uh, invest in this company for long term. It's not a short term buy, it's a long term buy. And but still you do your own due diligence and you do your own research before investing. And if you have any comments for us, please do let us know in the comment section, whether it's a good feedback or anything you want us to improve. And if you like the video, please hit that like button, share it with your friends so that they also come to know about any particular stock and they can also learn how to find a good quality stock and invest in it. So that's it for today.